What's up, guys? Good morning. Can you guys hear me? And am I very audible? I can see Stephanie. Stephanie, can you hear me? If you can hear me, just say you can hear me in the chat section, please. Okay, let's get it. Okay, good morning, guys. How are we all doing today? It's been a while. I've been on the chart, and I want to apologize for that because I know uh, it's not been the most favorable, having to wait for trades and all of those things. But I've been busy. I have been busy with other things, and as always, it's not always going to be trading. You should always find a way to do other things and venture into other things. So that's what I've been on. But that aside, welcome to our normal Monday Outlook sessions and with Ryan. And this week I've been able to see a couple of opportunities, and so a lot has been happening in the foreign exchange market for a while, in the finance world for a while. We've gone from the elections to tariffs to wars, and now we're presently in the battle of um, trying to understand what's going to happen next on the USD. If we're going to get if we're going to get some dovish policies or a hawkish policy, but everybody is expecting that Powell goes dovish. We want to see him soften policies and want to see him cut interest rates, since inflation has been on the low side. So Trump has consistently and even threatened his job just because he wants to cut rates. But what are the key factors and major reasons as to why all of this is happening is, number one, Trump is looking for a growth in the industrial sector of the US. He wants the US economy to start to thrive more on production rather than consumption. There've been a whole lot of issues with debt. The US is in debt and they are consuming more. Their balance of trade is not favorable. Everybody has like a better advantage over them in terms of their balance of trade. China has a better balance of trade against them because China is more of a producer than a consumer. So China is constantly producing for them and they are consuming certain cars as well. So they use a lot of Japanese cars, Canadian cars too as well. So all of these things is one of the things that is making Trump say, you know what, I want the US to produce for itself. I want us to be self-sufficient. And now in order to do that, he wants interest rates to be cut. And what's the major effect of interest rate being cut? If interest rate is cut, it means that you're softening the economy. You're saying, okay, the economy is good, and we as a country now we can start to allow borrowing. Because we are now seeing that companies need to increase supply and all of those things. So there's no problem. Now that is his major concern. He wants supply to be increased, and he needs companies to borrow money, because the more money they can borrow, the more businesses they can open. The more businesses they can open, the more job opportunities they can create. The more job opportunities they can create, the better wages his citizens get. The better wages his citizens get and cheaper products, the less they spend, the more they have to invest. So all of these things are some of the main reasons as to why Trump is looking for an interest rate cut and he's pushing for it aggressively. Okay, and an interest rate cut is going to favor his big dollar bill, his big bill, which is basically to reduce taxes and all of those things. Now, how is this going to affect the market? If eventually we get a rate cut, it means that we are going to potentially see the dollar, okay, we're going to see the dollar drop aggressively first. So you're going to get that huge drop. Okay, when they cut interest, you're going to get that huge drop. But what a lot of people do not understand, and I've always mentioned these things to you guys in my community, is there is a difference between there's a difference between currency and economy. Okay, so for currency, there's an immediate effect on currency. When when an interest rate cut happens, the currency drops. Okay, people want to short at that very moment. Now, the reason why people want to short is because in order for them to start buying, people would want to demand at a lower price. And remember, he wants people to borrow money, so people would start to demand more dollar. You get that kind of thing. So that's another thing as well. So what we're going to get is we're going to see the dollar start to drop aggressively, and then over time it would start to pick up and start to rally to the upside. That is when investment starts to grow and all of those kind of things. But when an interest rate cut happens, we see the currency itself lose strength. It's good for the economy, but the currency might lose strength because of how that fundamental affects the currency. So now what are we looking at? So now we're going to start to see, if that happens, we're going to start to see safe havens like JPY and CHF. We're going to see them start to suck in a lot of the USD as well. So you start to see more sales on USD JPY, USD CHF. For card, you most likely won't see a lot of shifts on USD card, but what you notice on USD card is there will be a range on USD card because the Canadian economy itself is not moving as expected, and they are also having like tariff beefs with Trump. But one of the latest things happening presently in the market is that we can also see that Trump is also is threatening countries that align with the idea and memorandum of BRICS. Okay, so the idea and memorandum of BRICS, if you align with it, he'll tax you more. His tariff for you will be higher. He mentioned that yesterday. So those are a few things that we need to keep in touch. Now, another thing that is going to be driving my sentiment around the market this second half of the year is, from the first half of the year, we've clearly seen that there was a whole lot of fundamentals in the first half of the year. We've seen the dollar remain, range, rally, become bearish again due to a whole lot of things. So in this second half of the quarter, I'm hoping to see that we get a more stable dollar and we start to see proper trend continuations or change. So you see, either we get continuations or we get a change in trend, especially for crosses, not majors. So your likes of them, AUD CHF, AUD NZD, we might start to see a change in trend for those ones, and then for the majors, we might continue, the trend, but hopefully would have to get a correction before we continue those trends. So that leads me into my technical analysis for the week and for the month. Okay, so first off, we're going to be looking at GBP JPY, and as always, I'm always trading GBP JPY, XAU USD. I don't really trade it that much, but I like to analyze it because it's a majority's favorite. Another pair that I like to trade again is the Nasdaq 100, and then as always, USD MXN or USD ZAR. But USD ZAR and USD MXN has been on a rest for now due to market conditions and South African conditions too as well. But let's start out with GBP JPY. Okay, so for GBP JPY, we're going to be starting out on the monthly time frame. Now, if you've been on my channel for, let's say, since, I don't know, should I say last year? Okay, you'd remember that I predicted GBP JPY to go all the way back to 200. Okay, and we've been at this resistance point for a very long time. We've been at this resistance point for like a very long time. We fell below and then we are going back up above it again. Now, you also know that I like to study candles a lot. I study candles a lot. And now what you notice here is we had resistance around this level here. Okay, around this level here. I'm going to be sketching on my screen so you guys can see properly. So we had resistance around this level here, 1, 2, 3, and this candlestick finally broke above this resistance point here. So what does that mean? This is a good break. It's not just a false break. Okay, now we also still have this resistance area around this area here, okay, which is the next possible point of liquidity that is resting in this whole range that institutions will definitely be chasing. So we have that sitting here. Now, why am I viewing the market this way is because every candlestick tells you a story, and every candlestick matters when it comes to understanding the charts. Okay, so now we have this resistance point, like I said, that has been valid since when? Since August of 2015. So this has been a key level. Prices broke above it, fell below it, and has tried to go above it severally but rejected. So key level, very key level. So meaning that anything that makes prices break above this level properly, it means that we're now having a straight, we're having like a very straight, bullish run to the next high, which is this high here. Okay, which is this high. So I view the market long term, and I try to see it's like long term kind of thing. So now this is the range that we want to completely get out of for us to now say, okay, this trend is continuing bullish. Now another major thing you want to also pay attention to here is pay attention to this order block here. Okay, so this was the orders that finally broke this level before prices pulled back in, and where the prices come back to, back into this order block. When prices came back into this order block, what did you do? Try to go above, fell, then came back again to retest a minor order block that was at this region here. When I go to the daily, you see this minor order block, and then prices did what? Rejected, trended up, and then finally has broken above that resistance with a very solid bullish candle. The last bearish candle came back into the broken key level and failed to close below it, and is starting to push up again. So now let's take off this drawings that I have done. Okay, so let's take off this drawings quickly. Okay, so now let's go to our weekly time frame. So when you look at the weekly time frame now, you see that we had the internal order block that I was talking about here. So this was the OB, and we in fact did wait for this OB in January, and it finally came in April here. So we saw prices, keep liquidity at this point, finally swept into this OB and then started to trend upwards. Okay, we had the internal and then the induced. So we had the internal liquidity here, then we had the induced liquidity, and then prices swept both of them into the OB properly and then started to trend higher. Now what's the next thing you notice? That these were the sellers that initiated the buys. So these are the induced sellers that prices is actually going to move. So if we were to study this properly, we would then say that the true liquidity is resting above here. So this is where our true liquidity is resting above. So our true liquidity is resting above 199,850. So this is where our true liquidity exists. Now you can clearly see that on the weekly time frame we have been bullish, and not just bullish, but we've also had bearish retracements happen at those points in this trend. So we cannot just say, okay, it's just completely bullish. We've had a proper trending market. Okay, so for the beginners on the call, I'm going to just easily plot my trend line. Okay, and you can see. Okay, can you see? Can see your trend, making series of higher highs and higher lows, which makes it easy. So now when we do in fact come all the way, okay, so let's refine this other block again. Okay, so let's refine this other block to where it exactly is here. Okay, so this is the other block on the daily here, and that's exactly where prices filled and started to move to the upside. So now what are we looking for? True liquidity at where? At 199,800. So that's why I have been screaming GBP JPY to 200. If you go back to my tweets from April, you clearly see why I stated that GBP JPY has to look for 200. Okay, so now what is the next thing we're going to look for? Now we're going to go to the 4-hourly time frame. What are we going to study on the 4-hourly time frame? Now we are going to study what direction of the market are we on the 4-hourly time frame. Remember, I always say this thing: the market has there are three major things I always look out for when I come to the market. Where's the market going to? Where's the market coming from? And why is the market going to where it's going to? So first of all, what I mean by where's the market coming from is basically, I'm saying, is the market coming from a demand or is the market coming from a supply level? Where's the market going to? So I'm basically looking at the structure of the market. If the market is going into a supply, that means we are what? We are bullish. If the market is coming from a demand, rather, we are bullish. If the market is coming from a supply, we are bearish. But if the market is, is just stuck in one place, it means that we're ranging. There's no direction. Okay, then now why is the market going to where it is going to is what we now term as liquidity, because at the end of the day, we don't move the market. Institutions move the market. Banks and all of these transactions, heavy transactions, move the market. In order for these transactions to be filled, they need liquidity to be present. So at the end of the day, something is driving the market, which is liquidity. So if liquidity is responsible for driving the market, it means that if you identify the direction of the market and you identify where the market is coming from, it means that there have to be a magnetic liquidity that is attracting the market to that direction. And that is why we have our true liquidity where we have our true liquidity just right above where just right above one, just right before 200, and 200 now is the target. So now what we are going to study now is the direction of the market. Okay, we know the market is coming here, so we're studying the direction of the market, and the direction of the market on the 4 hourly time frame is clearly bullish. Why is it bullish? You can clearly see the market making what series of what higher highs, higher lows, higher highs, higher lows, higher highs, higher low. Okay, very clean structure. Now we want to enter this trade either today or tomorrow. So what do we need to study now? When we go to the smaller time frame, when we then go to the smaller time frame, now we're now going to be focused on the 4 hourly time frame. Okay, the 4 hourly trend, this bullish trend is now going to be our major trend to look at. So now what are we going to be looking for? We're now going to be studying the chart to understand what side of the market are we in. Are we in a pullback phase or are we in a push phase? And from what we can clearly see now, we can clearly see that this resistance level is holding. Remember these lines? These lines are key levels from the monthly time frame. So let me map this out quickly as key level. Okay, so this is a key level from the monthly time frame. Okay, so I'm going to make this very thick so that we remember that when we see it. Okay, so these are the two key levels, and we see prices touch this key level from here and then move rapidly. Not only did it touch this key level from here, but it aligned properly with the 61.8%. Can we see that? So when you look at my Fibonacci, okay, so I'm just going to make this bolder, and let me see, I think I should make it black. Okay, you see it aligns properly with my 61.8%. Let me see if I can make the font size a bit bigger. Okay, so yeah, so you see 61.8 exactly, that's the zone it came for, and then it started to move upwards. What does that tell us? That our Fibonacci retracement is correct, and it serves as what, as a correction tool. Now we want to make an entry, but not just anywhere. Okay, if I wanted to swing this trade with a very wide stop loss, I would have entered this trade like since midnight. But now I'm looking for prices to come back, so I'm studying minor structure. So I go to like my 1 hour time frame now, and now I'm looking to understand the structure on the 1 hour time frame. Now what do I notice on the 1 hour time frame? Okay, so on the 1 hour time frame now, I can clearly see that prices was bullish at this point. Then the bearish correction came into the market, and prices have shifted that bearish correction. So now we've gone from creating lows, high, low, lower high, lower low, lower high, lower low, to do what? Create a new higher high. So this new higher high now has done what? It has invalidated the 1 hour corrective structure, which is this structure here. So this is the 1 hour corrective structure here, which was kind of like a flag. Okay, so you see it, we had like a flag, a bearish what okay, so it then means that we then have to come into that, what we have to come into that bullish character again. So what do we have? So now we have a break of structure at this point, a change in character. Now we've seen a change in state of delivery happen at this point here, which was valid. Now we have this level here, then we have a valid order block. Why is there an order block? This was the last bearish point. This was the last the last interaction between bears and bulls before the rapid momentum that did what? That broke structure, that moved the market. This move completely shifted the market from bearish to what? To bullish. So now we need prices to come back into this order block. But now this is the trick to it. We can't get a full push back into the order block without liquidity. So here's the secret. One of the major things that validates an order block is the presence of the liquidity that lies before the order block. Never forget that. If you find an order block and you think it's an order block and there's no liquidity resting before the order block, then two things will happen. the first touch that might come into that other block or come close to that other block is most likely going to be an inducement. Because at the end of the day, in order for an order to be valid, it must trap enough liquidity to move prices from that point. My voice is kind of low. Okay. How about now? How about now? Is my voice loud enough now for you? Okay. So you need to identify that liquidity itself. Okay. So now what do we then have here? So now I have identified that, oh, there's an order block, but there was no liquidity resting before it. So now at the back of my head, I know that there's a certain level of inducement that is supposed to happen. So what am I looking for? I've mapped this point, this first buyers that happened this morning, as my area of inducement. So this is my area of inducement here. Why? You can see that Asian session trader started to buy at this point. So I'm mapping this area as an inducement. So I'm waiting for prices to what? To sweep them, take out all the early buyers, come into this other block before I execute the trade. And when you go to your 15 minutes time frame, you can still then study the structure from this point here. Okay, you can see the 15-minute structure here. You see prices just came and tapped into what? Into a supply level and is selling again. Can you see? So sells to buy more. So this is serving as what? As my liquidity hunt for prices to come here and then start to buy. So if you have any questions, let me have your questions in the chat section. Okay, so let me have your questions in the chat. Just drop your questions in the chat, and I'll come back to this. Okay, so that is why we are waiting on GBP JPY, and I am going to be taking this trade full time. I mean full time. I am going to be taking this trade now. Not only does this align, okay. If you know me, I like to use a lot of confluence. Okay, not only does this align, but when you also plot your Fibonacci, which is a tool that I use a lot, what do you see? What do you get? 61.8 right in this level. 61.8 right in this level. Right in this level. If this level does not hold, then probably the just above here, which already has been retested, is why I'm not so focused on it. This high here, you can see that this high has been retested already. Prices broke above it, retested it, and moved. So this already has been validated. This already has been tested. Okay, this already has been reconfirmed. So this is a reconfirmed area already. So now we're looking for what? 61.8. Tap and move, just exactly, and clean. That's exactly what we're looking for. That's exactly what we're looking for. So the moment I get that into this area here now, then we're buying GBP JPY. So what do we do at this point in time? You can just easily set a limit. Okay, I like prices to like come into that area, then I take my trade. But at the same time, it's okay if you set a limit. Okay, you can set a limit. So where we are focused on right now, okay, give me a minute, guys. Okay. Okay, guys, I'm back. Just give me a minute. Okay, so I'm back, guys. Okay, so let's okay, so yeah, I needed to get my journal. Okay, if you're still on the call, so what I want you to do is, if you have your journal, okay, just go to where you write your trades down for the week. Okay, and I want to believe everyone on the call has a journal. Okay, if you do not have a journal, try to get one. Try to get a journal. It is very important for you as a trader. As a trader, you shouldn't be without a journal. Try to get a journal at all times. Okay, and what you do in your journal is you can journal the trades you take, okay, or the trades you want to take, so that you always go back to it without forgetting them. Okay, so you just write down the price. So I'm going to give us the price now. Okay, okay, so GBP JPY. Okay, so GBP JPY, today's date, you write down today's date. Okay, you want to write down today's date, and today's date is 7th July 2025. Okay, and then so you now write price. Okay, so we're looking to buy. Okay, so we're looking to buy. So buy limit at, so we're setting our buy limit at 196,500. Okay, and then our stop loss. Okay, our stop loss is going to be at our stop loss is at 195,800. Okay, and our take profit is at 200. Okay, then we also have another take profit at 201, then 202. Then long term, we are going to be looking for 212, like very very long term, 212. But before 212, we should see 206, then 212. Okay, those would be like our long-term profits. Like if you're going to swing it and you want to keep trading it, and we're looking for like a very very higher this thing, we know that I know GBP JPY is going to go back to 212. So that's like our long-term view on GBP JPY. Okay, so I've journaled that out already. So I'm just going to set my alert right now. Okay, I'm going to set my alert at 196,600. so that the moment prices starts to cross 196,600, I would be alerted for my trade. Now, day traders on the call, one thing you would notice here is you most likely can be looking for an opportunity here. Now, why you can be looking for an opportunity here, honestly, is we had like a very good, mitigation area here. But the only reason why I would want to even take a sell is because I know that prices is coming to this zone. Okay, so if I was to go short term, and this is how I would approach it. Okay, so let me show you how I would approach it normally. Okay, how I'd approach it normally is, first of all, identify that I'm still bearish. So we had this break here, we had this high here, prices swept this high, 1 2 failed to break above it, doing some sort of double top. Not only that, we then have a change in state of delivery here. At this point here, we saw this huge bearish momentum break that level. Okay, so that's why I call it change in state of delivery. It was previously bullish, okay, but now we've gone bearish with huge momentum. So what I'm going to be looking for now is for this level to hold, okay, as a very good support on resistance short time frame. So now I'm going to be looking for another bearish confirmation within this region here, from here like this. If prices fails to break above here and drops below it, then we will then take a sell. So what we'll then be doing is to what? We'll then take a sell to buy trade on GBP JPY here, okay, as a day trade. So we'll take a sell to buy at this point here. If this level holds and fails to go above this area, yeah, so we'll take a sell to buy trade at this level here. So that's that for GBP JPY. Okay, I hope you're still following. Okay, so yeah, that's that for GBP JPY. Now let's look at the next pair. I sent out this analysis, and I honestly don't know if you guys were following through, but I did send out gold, okay, and I'm still waiting for gold. So now let's talk about what's next for gold. Okay, now when we're looking at gold, one of the major things, yeah, exactly, for gold right now is we're starting to see the dollar get strong. I mean, short term, we're seeing that short term strength on the dollar. uh let's look at so we're seeing that short term strength on the dollar. Let's pull up the XY quickly. Okay, let's pull up the XY. And what you can see on the DXY is, you can see the DXY, we tapped into a demand zone here. Previous support level, resistance became support, support, broke below, didn't hold as a major resistance any longer, and then broke above it, and then now has come back into it again as a support level. So we are seeing some sort of correction phase right into, okay, into this bearish candle here. Okay, so what we're getting here is we're getting some sort of correction inside this bar, inside this bearish move here from last week. 1 2 3 4 5 6 7, so 2 weeks. So we're getting like some sort of correction, most likely, maybe into this gap here, kind of thing, and then we'll see what happens at that point. So short term, we can see the corrective dollar short term. So what's going to happen now? Definitely, we are going to follow the strength of the dollar. So wait for that pullback and then continue the buys. Why? Because we're also seeing that prices is starting to make series of lower highs and higher highs. Higher lows and higher highs. Okay, so that's what we're seeing right now. So now, when you go back to your gold trade, XAU USD spot. Okay, what you'd see when you come to your weekly time frame is, first of all, you see this huge bullish move to the upside. Obviously, you know what has been causing that: elections, war, a lot of uncertainties has been causing that. But now when you come into this level here, the first thing you notice on gold is we have this huge rejection. This was the first play on possible resistance at 3,500. 3,500 exactly. That was where this huge resistance happened, which was the the hour mark of where institutions and financial analysts expected gold to get to 3,500. Then we sold off, then we bought back, and then we finally came back to 3,400, which was the first point of resistance that was created, and failed to break above it, and then we started to sell. Now, not only did that happen, but when you then look at the structure of the market going into that level, we were bullish. Okay, why were we bullish? Lows coming from where? Not just coming from anywhere, but these lows came from where? From a valid demand area. Previous what? Higher time frame resistance turned support. So this became a good demand area on the higher time frame. Basic demand, don't forget. And then prices moved to the upside, and then we were bullish. Then all of a sudden something happened. When we come to the 4 hourly time frame, you would see it clearly. We moved from this bullish movement in the market to prices rapidly coming to sweep and invalidate these lows. Now these lows getting invalidated simply means what? That we've changed, or we've shifted the character of the market from making higher lows and higher highs into what? Making a high and a lower low. So this low is lower than this low. So what happened? We've shifted, the structure. Now, not only did that happen, but we saw prices come back into a key level. And why is this area a key level? You can clearly see it. It has acted as a resistance, acted as a resistance, acted as a resistance. Finally, acted as a support somehow at this point. Then we finally broke through it and came back again to revalidate this area. So what do we have here? We had prices test this level here and then started to sell off. So coming to the 1 hour time frame now, what do I then look for? I then look for what? Price action. See? Imbalance, liquidity, double top, clean. Prices move into this level here. What do we then have here? What do we have here? Neckline of the double top. And what also is that? A change in state of delivery from this 1 hour time frame bullishness. Change in state of delivery. What the prices do? Go back to what? To retest and revalidate that level. What happened next? Prices sold off and started to dump aggressively. So what am I looking for? I'm looking for prices to come back into this lower time frame key level. Why? We've seen this key level act as a support. We've seen it act as a support here again to push prices back into this resistance, and now we want to see it revalidate itself as a resistance. And when it eventually does, then what happens? Then we take the trade. Then we take sales from this point, and we have our stop losses just above here, and then we target lower. We target the last point of support, which is here. So I have one target here as well. Okay, I have one target here as well. I have one target here as well. So we target 1 and then we target 2 as well for gold. And this is my analysis on gold. Okay, so I'm bearish on gold until structure is properly changed or any of those things. But until then, we're still looking for these sells. Now, what's the level for this sell? What's the level for this sell? So we're looking for gold sells from anywhere around 3. We're looking for gold sells anywhere around 3. Honestly, let's open this up a bit. So we're looking for gold sells from anywhere around 3324 to 3330. Okay, so we want to see 3324, 3330. Okay, that area, that's one of the places that we're looking for. Okay, so we're looking at XAU USD. Okay, so we're looking at this trade as an intraday trade. So this is an intraday trade. Don't forget to journal that down. we're looking for GBP JPY as a swing. We're looking for XAU USD as an intraday trade. Price, we're looking to sell. We're looking to sell at price of 3324 slash 3328, and our SL is going to be at 3352. Okay, our TP, so one, we're going to have TP1 at 3296. We're going to have TP2. We're going to have TP2 at 3280. And then we have TP3 at 3250. Okay, so that is the trade for XAU USD. Okay, so don't forget XAU USD, we're looking for sells. We want to sell at the price of 3324, 3328. Okay, then we look for our SL at 3352. Our stop loss is going to be at 3352. Then our TP1 is at 3296, TP2 is at 3280, and TP3 is at 3250. So this is going to be our TP1 here, 3296. Then TP2 is at 3280. Then our TP3 is at 3250. Okay, so this is my outlook for gold. Okay, so that's going to be our target for gold. The SL again for gold is 3352. SL is 33. SL is 3352. So we're doing a 1:4 risk to reward ratio. Okay, 1:4. SL is 3352. Okay. So if you're on this call, I would be live on TV in about, what's the time? Yeah, in about 3 hours from now, by 1 p.m. I would send us the link to join. But I'll be on TV. I'll be discussing about financial inclusion and the importance of financial education in Nigeria. So please don't forget to tune in and join. Share the link. If you're using your TV, it is channel 258 on DSTV, and I think it is channel 152 on Star Times, I think. But I'll be on ADBN TV, so please do make sure you tune in. And yes, so that being said, if you're watching right now and you've not followed my YouTube channel, please do follow. Please. Don't forget to subscribe, like, share. Invite your friends, the fellow traders, the ones that don't know how to trade. Invite them to enjoy videos on my channel and my page. And yeah, I can see my real ones, and I see the ones who rock with me always, and I appreciate you. I see I have 2 top fans presently. I see you, Afesu John. Thank you very much for being a top fan. It means a lot to me. It means a lot. You're my first top fan, so it means a lot to me. I'm always going to remember that in my head. And yeah, so let's look at Euro USD. This is one trade that I think just zoomed off. It literally just zoomed off because I sent this trade out this morning and it zoomed off. And I hope there are people who took this trade because it's going as planned. And I feel like I don't need to say too much about this trade. It's very easy. It's already mapped out. Okay. Higher time frame supply, change in state of delivery, so higher time frame change in state of delivery, supply, bearish trend, series of liquidity, tap into supply, order block, and then we are selling off. Come to the 4-hourly time frame. What do you see on the 4-hourly time frame? Buy. Sellers failed, buyers failed, sellers came into the market, return into supply, and then we are selling off aggressively. when you come into the 1 hour time frame, you can clearly see the cells. I called this trade at this point this morning. If you had entered this trade, you most likely should be doing anywhere, because I went to jog, so I didn't see it. I went for a morning run. So this was 50 pips. This 50 pips already. Okay, if you took the trade from when I called it this morning, you should be up 50 pips already. I'm going to find a re-entry. Personally, I'll wait for prices to sweep this area here, and then get prices to pull back in a bit. Then I'll continue my sales for Euro USD. But I believe I've called all of this. And yes, so if you have any questions, guys, if you have something you want to ask or anything, feel free. This Q&A session time. Let's get it. And so far so good. I hope you've been able to grasp the idea behind my trades and why I'm taking my trades the way I want to take them. And I hope you were able to write down all the signals in your journal so you can go back to it. And if you did enjoy the live session, leave an emoji in the chat section. Tell me you're following. Tell me you understand it. Tell me you've taken the signal up. And after my meeting by 2, I should be active for New York session. So we'll see if the trades have reached the level where we want to take them from. So let's see, what is GBP JPY doing. Good. So GBP JPY is still at this point, failing to go above it. So we're still going to be watching and waiting. New York session, probably we might get the opportunity to execute this trade on GBP JPY. Thank you so much, guys. I see you, Daniel. If you have questions, don't forget to drop your questions. Okay. Okay, so we see GBP JPY. GBP JPY is pushing into this level. Let's watch and see if that level is going to hold, or it's going to break above it, and then we'll take a trade. We're going to be looking at we're going to be understanding the news. We're going to be talking about fundamentals on our classes. We're going to have classes every Wednesday. Okay, free classes for everybody every Wednesday. We're going to discuss technical and fundamental analysis, how to merge them, and we're also going to be looking at like examples of times where they have played out and they have occurred fully, so that we see them, not just talk about them. Okay. Uh, okay. So we have GBP JPY in that zone right now, but I'm watching it. I'm watching to see what happens from that zone. The funny thing is when you look at USD JPY, you see that USD JPY has done its move already, very massive move to the upside already. But when you look at GBP JPY, GBP JPY is still trying at that point. You see, we're getting some sort of bearish pullback into this level. But now, what I want completely is for prices to what? For prices to sell off again. So I want prices to come back. I want prices to sell below completely. I need prices to sell below completely. Back under here, and then we'll take the trade. I don't even want to enter from here. I want it to close here aggressively, pull back, and then we'll enter the trade for the sales. That's the only way I'm going to want to take sales on this GBP JPY for now. Okay, so that's going to be my intraday position. Unless that happens, then I would not be taking it. So let's just watch and see how that happens for now. And yeah, that would be all for now. Thank you guys for joining the stream. I really do appreciate you guys. And as always, thank you to my top fans. Thank you to my members. Thank you to everyone that joined this call. Don't forget to like, share, subscribe. Do not forget to send to a friend. Don't When I'm done with this, I'm going to copy the link, and so you can go back to rewatch it, and then you can also share it to other people to watch. Thank you guys so much, and I would see you guys by 1 p.m. And as always, it's Ryan for a reason, baby.